Hey guys, Darren here. Thanks for joining today's July 31st stock option market update. We've got some exciting things to talk about this week. We're going to talk about where we are in the market today, interest rates, inflation, and general economic data. And then we are going to touch on some of the option trades that we had on last week, that we still have on this week, and what we may put on this week. So we're going to talk about individual stocks on the Tastytrade option trading platform, and I'm going to share all those with you in detail. If you have not subscribed already, please go ahead and do that now so that you're informed of all upcoming videos. Also, please hit that like button so that we can get the video out to more people. Really appreciate that. And finally, download that free options workshop in the link below. It talks about the benefits of trading stock options over buying stocks alone outright, and it's completely free. So with that, let's go ahead and get started. All right, guys, so where are we in the market today? Let's look at the S&P. We are at 45.82 this week at the end on Friday versus 45.36 last week. So almost completely flat for the week. And we're already up about 18% this year. So we're kind of at highs. PEs are at 19.5, close to 20. So we're still above the 17 10-year average. So still a little bit high. I really like to be long stocks when they get down in the 15 to 16 PE range. So this is the S&P. There was some new home sales that was out this week, and we did see a drop from 763K in the prior month. So home builders do see better times ahead soon. More than half the homeowners are locked into mortgage rates right now that are under 5%. So a lot of people aren't putting their homes on the market, and a huge portion of the people that sell, they don't want to go in and sell and then have to deal with the 7% interest rate right now. So they're looking for interest rates to be lower. So I have a feeling that the housing data and people putting their markets on, their homes on the market, are going to continually be low. Good for the home builders because they're building homes because there is still a need for them. So that's kind of the home building portion. And inflation numbers came out, and they came out about 3 weeks ago. And the CPI, it came in at 3%, which was lower than expectations. Core inflation sank to 4.8%. So again, we haven't had new numbers come out yet. We're shooting for 2% historically, and really for the core inflation rate. And we got Jerome Powell talking last week and the last couple of weeks, and saying that he doesn't see interest rates being cut until maybe 2025 when we get to that point. But if we look at the Fed Watch tool, right now we have interest rates 5.25 to 5.5 for September prediction. November, we're still 5.25 to 5.5, 67%. January, still stay the same. And it was March, last week, March, we were still expected, or that was the first point when we were expected to lower interest rates to 5 to 5.25. There was a higher chance of that. But now this week, it's moved out a little, because it's still expected to stay in that 5.25 to 5.5 inch range. There's a 38% chance on this Fed Watch tool. And it's not until May that the first rate cut down to 5 to 5.25 actually happens. So it's a little delayed. It moved out, to the next cycle in May, as of, from last week to this week. So that's kind of interesting. The overall economic data, I would say, I still see that there's a floor, because if the economy if the numbers come out and they get worse, the Fed can always cut now sooner rather than wait until that May timeframe. So he's got that ability. And then on the high end, I don't think we're going to move up too much higher than where we are right now, because we're already up 18% for the year. And we're at a high PE ratio of 19.5. So with that, let's see. We've got, let's jump to the insight, the earnings insight report. So this, you just can put in, FactSet earnings insight, and they come out with this every Friday. It's a great tool to look at what the market did during the week, what's expected going forward, um, and it's something that I use. If we look at page one, we can see the earnings decline last week. We at the largest decline since Q2 of 2020. Um, we're at a minus 7.3% decline. But last week it was at minus 9.9%. So earnings did come out. A lot of companies came out, and it improved a little bit. The 12-month forward PE ratio right here is 19.4. And that's about where it was last week. It was at 19.5. The 10-year average is 17.4. So like I said, we're still a little bit high. Now, if we go to page 12 of the report real quick, let's look at the Q3 earnings growth, projecting 0.2% versus 0.1 last week. Earnings growth of 1.1 versus 1.2 for the revenue growth. So very similar. And it's not really until calendar year 2024 where revenue growth, really starts to happen. 12.9% earnings and 5% revenue growth is expected. So 2024 should be better. If we go now finally to page 30 of this report, we can look real quick. And I talked a little bit about this last week, but I still do like the energy sector. It's an 11.8 PE versus the 10-year average of 15.6, so it's on sale. I like the financials. They're fairly priced at 13. And I like real estate. It's 17 versus 19.5. And interest rates, they're going to be flat now and possibly coming down in a few months. So I like those sectors going forward. And let's jump to the trades that we have on from last week. We're going to go a little bit faster this week than we did last week. But crude oil, let's start with that. It jumped up to 80.67 right here. You can see. And let's see, with 80.67 for crude oil, we're up to $519 that we've made so far on these particular trades that we have on. I had put spreads. I had a 68.67 and a 70.69, so those are doing really well. And then when the crude oil prices moved up, you can see they moved up last week. And I've got this RSI indicator in there now, so relative strength index, and we're up, at the 70 range. When it gets to this range, it means that it is overbought. So the expectation is that it's going to get down to this normal range. So with it up in this range, I went ahead and sold an 83.84 call spread. And you can see it's down a little bit, but I'm comfortable with that. There's quite a bit of premium that I can still make right there. And we're still well within the profit range. 80 is right up here. I put that call credit spread on. We're in good shape here. We've got this huge profit range. And overall, we've got $280 to make in the next 19 days. So we're in good shape on crude. I think it's going to trade in that 80 to 70 range. Anytime it gets below, I'm going to sell put spreads. Anytime it's up in that 80 range, I'm going to put on and sell some call credit spreads. I put on a bond trade last week. Bonds are at all-time lows. You can see right here for the year. So with that said, I sold a put spread and collected $381. It's down a little bit, but I do expect bonds to rebound. We'll see how that goes. Corn, we talked about this last week. No changes really there. I've got two put spreads on. It's at lows, but it's done pretty well. And you can see we've already made $133, $198 left to go. I'm sticking there with the corn. AI, we've done actually 290 in this trade, and we've got a strangle on 32 to 50. We're right in the middle at 39 is the where the stock's at right now. There is earnings, it looks like, on 8:30, so that we're still a ways out. So we're gonna have the expiration date on August 18th is actually going to occur before earnings. So I expect it to stay in that range and make this 175 that we've got left to go. AMD, we've got earnings this week, and it moved up slightly from last week. We're at 113 basically right now. We just needed to go up a little bit more, and we're making much more profit, but we're still in the middle. Big profit zone from 95 to 127. So we're in pretty good shape there. $298 left to make in the next 20 days. So we're going to see how earnings come out and then make some adjustments, probably this week after the earnings come out. Amazon, we've got 150 left to go. We're right in the middle. Earnings this week, so 120 to 150. We're at 132. So we'll see how that goes and then make adjustments when earnings come out. Bank of America, I don't think there's any real changes. This is one that, Warren Buffett owns a boatload of Bank of America. And we've done really well in Schwab, one of the other banks, but Bank of America is down a little. But we're going to leave that on, stay long. Citibank, I had in Citi let's see what we did. We'll show the chain. Let's look at the option chain for the last 180 days. We've done pretty well. We made $447. And yeah, last week we bought back our strangle that we had on. So we sold a strangle back on May 24th. You can see right here for $222, and it was the 42.48. And then this strangle, we rolled it. The price in Citi moved up, so we right here rolled up the 42. We bought back the 42 and rolled it to the 46. So we had a 46.48 strangle on. We collected another 55 cents. So we collected a total of $277. And then we closed last week, you can see right here, for $114, so $114. So we made $163 on that strangle in a fairly, short period of time, and that helped us here, to where we are today, up 447. So we're going to leave on that long. I like the banks, and I think they're still at low. Well, they're pretty fairly priced, Citi right now, but I think the banks are going to do well going forward. Chevron is a fairly new trade that I put on. Sold a put spread, and we collected $117. We're up $5 right now. It moved up a little since I put it on, but it was the 150, 155. So anything above 155, we keep that full profit. It would be $117, and you can see that right here, the 117 collected, and we've got 112 left to go. So with that, let's see, Deere. We sold an iron condor, 400 to 470. It's at 427 right now. So we're right in the middle of the range. And Deere has earnings coming up on 8/18, which is interesting because that is the expiration date. So we'll see how we do. It'll probably, if we continue to make money and we've got a good amount of, that we've won, I may take it off. I may leave it. We'll see how that goes. But we've got a couple of weeks to go there. DraftKings, we've done pretty well. I like DraftKings, as you know. We've done, let's see, over the last 180 days, let's see, 365. Oh, that's Deere. That's the one we just put on. Let's look at DraftKings. All right, DraftKings. Yeah, there you go. 1,300 over the last 365, and 867 over the last 180 days. So we've done pretty well in there. We've got a leaps option and then a call that we sold against it at 35, which is pretty high up from the 32. It's going to take a pretty big move. So we're profitable as the stock moves up. And what did happen there? There we go. Anything above 22, and it's at 32. And, above here we make max profit above the 35 call. So We're playing it both ways with a poor man's covered call in DraftKings. End phase, let's see where we're at there. The stock is at 154. Earnings came out last week and there was a big drop. They missed on the top line earnings. Uh, no, they beat the top line on the earnings, but they missed on the revenue and they lowered guidance. But that's a game where the analysts expect them to be at a certain range, and sometimes they beat it, sometimes they don't. But I do like Enphase Energy long term. They're in solar, EV chargers, inverters, microinverters, and I think they're going to do really well going forward. So anytime there's a drop, I'm going to stay long. But what happened if we look at how we adjusted it? Let's see. So we had an iron condor on, and we collected 284 when we put it on, and then we rolled because it moved up, and we collected another 191, and then earnings came out, and so I closed it out for 770 debit. So we were down at that point $295, and now I've just recentered and sold another iron condor for $390. So this will actually put us up $100, and you can see how we did that in the option chain. If you have any questions on that, let me know. But now we should be in the profit zone. Yeah, we're right in the middle, and as long as it stays between this 135 and 175, and there's no earnings coming up in this next period, and it just made a big move down, as you can see. So I do expect it to stay in that range. I like after earnings adjustments and trades because it went down for a reason due to the missing the revenue and down on the guidance. So with that, it's going to stop it from rebounding too far up, and it's already taken the hit. It's not going to go too far down, I believe. At least that's why I'm putting this trade on and hoping to rebound in this next monthly option cycle. So that's how it works. Golden's a small one, not going to cover that. Meta, I've been long. It's got earnings. No, earnings came out and it moved up. So I'm above. I'm in the 325 range with 20 days to go. So I'm not quite profitable. I'm down $89. IVR is low. I may just close that out on Monday at the start of the week, and then it's hard to bet against Meta, and things are so high right now, and I'm short the Qs already, so we'll see how that goes. I may or may not close that. I may wait a little bit longer and then close it on a down day. MPW, this is the real estate sector that I like. They're in healthcare. I like owning the shares outright in this stock because there's a 12%, a huge dividend. So I think that the stock's going to do well, but I like collecting that 12% dividend. So anytime that there's a drop, I'm going to be buying more MPW. And you can see they've kind of been down a little bit. But again, you've got that dividend to factor in as well. Netflix, done pretty well in this stock. It's got a low IVR though. Now we're down to 0, but we're right in the middle between our strikes, and we've got 217 left to collect. There's no earnings. They already came out, and we're between 405 and 480. So we are right in, we're a little bit left of the middle of the chart, but I love trading Netflix. You can see we've made 2,458 just over the last 6 months, and 2690 over the last year. So Netflix has done pretty well for us. Palantir, I do like long term. It's trading within a range, seems to be now. I like it anywhere. I like to be long anywhere above, or buy more or sell puts in the 15 to 16 range, and I think the top is in the 19 range. So that's what I've been doing, and you can see I've got the puts on and the calls, and profitable right here anywhere in that range. And right now we're at 17.8. We've got an 82 IVR, so that tells me earnings is coming right up, and there it is on 8.7 coming up. You can see Palantir earnings on 8.7. But I do think it's going to stay somewhere in this range for a little while. So I like trading Palantir. Let's see where we are. You can see how we've done over the last, what, 60 days in Palantir. Yeah, $1,200 in just in the last 16 days, 1232. So done pretty well there. The Qs I mentioned, I'm short, so we're hoping that that goes down. So I'm long a lot of these others and then short the Nasdaq tech stocks because it is still at a high, and you can see it's up. Where is that? 65. So it's getting near that 70 range, which means it is overbought. But tech's been up for a little while, and that's why I'm kind of betting against the Qs right now. SoFi, great long-term stock, own the shares outright, and a Leap. They've got earnings coming out the 31st, so early this week, and we've made $631 in this particular trade. We're at 9.55 right now. IVR is good because we've got earnings coming up, so 51. So it looks like earnings are actually Monday before the open, which is interesting. If it does drop and there's bad news, if there's no bad news long term that I foresee, then that's an opportunity for me to pick up more SoFi. So that's the way I'm looking at that. TDOC, where are we at? 3.8 IVR is low. I've got two poor man's covered calls on, and yeah, so we're betting that the stock goes up, but I like it long term. I know that we've done pretty well in there. You can see $764 that we've made so far on this trade. Tesla has been a good stock for us as well. We can look at the chart. It's at 266 right now, kind of right in the middle of the range. We've got a put spread on at 255, so we're profitable anywhere above that range. And we just had, a bit of a drop, so I think we're in good shape there. I think it's been pretty good for us, over the trading, 459 over the last 180 and 704 over the last year. So it's been pretty good. And let's see, UPS we've got earnings coming up on the 8th. We're at 175 to 200 Iron Condor, and we're at 187, so we're right in the middle. IVR is 28. We're in good shape. We'll see how our earnings comes out, but IVR was pretty good, and I saw the opportunity there and just put on an Iron Condor. Upstart. Where are we with Upstart? We've got Iron Condor 42 to 77, so a huge range, but we do have earnings coming out. We've got $158 that we can make right there. So again, we're kind of in the middle of that range. We're in good shape. Wells Fargo, I like long term. The banks, I've got a Leaps option on there. We've done pretty well. You can see with that Leaps, it profits just like owning the stock outright. So rather than buying 100 shares for $4,614, we can buy a deep in the money Leaps option, and I've got some videos on that, so check that out. But that will act just like the stock, and we make money as the stock moves up. So your return on investment is much higher with Leaps options, and you can see, we've made $618 there over the last year. So we've been doing pretty good in that. Let's see. Last one, ExxonMobil. I like the oil right now, although crude is now kind of at a high, but we're still in good shape on Exxon. So some of the oil stocks have not moved up quite as much. They're still fairly priced, where crude is kind of at the higher end. I think that was closer to the 70 range on the chart. Yeah, we're up here for the RSI on being overbought for crude, yet the oil stocks, which typically follow crude, are not up there. So that's why I still want to be long ExxonMobil and then CVX as well. And we've got two put credit spreads on. We've already made 150. There's 20 days to expiration, and 134 in external or extrinsic value that we can make over these next 20 days. So There it is. I put a link down below again for that free options workshop. Be sure and grab that. Remember to like and subscribe. Let me know what you're trading today, what you like about what we're doing and you just saw here. And yeah, any opportunities, please let me know. Let us all know in the comments below. And let's learn together and make money together. Thanks for watching, and see you in the next one.